back to the channel. My name is Broc. Today I am doing a video on Charles Schwab's earnings for Q3 2025. They delivered quite a blowout quarter. In this video I'm going to break down year-over-year growth, dig into management commentary, highlight key risks and opportunities ahead, and what this means for investors. Let's dive right in. Going over the top line, Schwab reported net revenues up 27% year over year to about $6.1 billion, beating consensus expectations. Earnings and EPS, GAAP EPS at $1.26, adjusted EPS at $1.31, roughly a 70% increase versus Q3 2024, also beating Wall Street expectations and consensus of $1.25 by a bit. These are some of the very strong numbers that I like to see. Assets and asset growth and new assets. Total client assets rose 17% year over year, reaching $11.59 trillion. Oh my gosh. Core new assets, NNA, $137.5 billion in Q3, up 44% year over year. That brings a year-to-date asset gathering to $335 billion, up 41% year over year. Schwab also saw over 1 million new brokerage accounts in Q3, the fourth quarter in a row exceeding that threshold. These are some of the trends that you want to see in a business. Trading revenue was very strong, up 25% year over year, reaching nearly $995 million. Other business line segments, such as wealth solutions, managed investing, also showed solid flows. For example, managed investing net inflows grew 40% versus Q3 2024. On the balance sheet side, Schwab was also able to reduce reliance on higher cost funding sources. Client sweep cash rose $13.5 billion, letting them reduce pricier supplemental borrowings by $12.9 billion. The CEO of Charles Schwab stated the strategic focus on delivering for clients drove the results, pointing to strong organic growth, higher adoption of wealth solutions, and favorable macro tailwinds as key drivers. He reiterated the importance of continuing to win wallet share from existing clients and attracting new clients via expanded services. On funding and margin, the emphasis on deploying client sweep cash to reduce expensive borrowings improved net interest margins. The company also hinted at investments in wealth offerings and managed solutions to deepen relationships across client segments. Some of the risks for the business include interest rate environment, margin pressure, cash sorting, client behavior, moving money around, market volatility and trading volumes, since a large share of trading revenue depends on volume and client activity, execution risk in scaling managed wealth offerings, just basically different lines of their business in scaling, regulations and compliance, which is normal for banks and financial institutions, and valuation and investor expectations. With strong results, expectations rise, and any future slip up can punish the stock. The stock's valuation does already reflect an expectation of continued growth and also prices in risk of multiple compression if growth falters. Opportunities and upside potential for this stock include depth of client relationships and cross-selling, tailwinds from rate cuts, yield curve moves, economies of scale and operating leverage, new product expansion and innovation, share buybacks, capital returns. If Schwab believes its stock is undervalued, capital return programs could benefit long-term holders. What this means for investors, the quarter was very strong for Charles Schwab. Record revenue, strong growth across segments, good control of funding costs, But as always, sustaining this will require execution, favorable macro conditions, and client retention. The absence of specific forward guidance means investors will lean heavily on macro signals. For those considering entering or adding, the risk-reward hinges on future consistency rather than one blowout quarter. So continue to review earnings, listen to the earnings call, do your homework. Thanks for watching Stock Broc. Peace.